This is the last chance for the bulls to place their trades this cycle. And that's exactly what I'm breaking down for you in today's video. Because after a 36% drop from the previous all-time high, I truly believe that now we have reached the local bottom, which means that we are about to have a counter trend bounce. On top of that, we are going to check some key crypto charts such as Ethereum, XRP and Solana, some crucial price setups and the most relevant news you need to stay ahead. So if you haven't already, hit that subscribe button and check out some of my recent uploads. Now let's jump straight into the core of today's content. Since October, we have been dropping in price of Bitcoin tremendously. And just like I said on Twitter, this is just my personal opinion, but when you see the price of Bitcoin dropping like that, the best thing you can do is wait. This is because, guys, it is a terrible idea to try to predict the bottom. You have been seeing on Twitter all the time, people saying, this is the bottom, this is the bottom, this is the bottom. And the reality is, no one knows for sure. However, what helps on my confluence is the fact that I have a confirmation system. Because from what we see right here, after the price has broke down the 50 weekly moving average, I was waiting for it to break above the 10 daily moving average. And that's exactly what already happened. So we can say with a good amount of confidence that the both daily and weekly cycle lows have been confirmed. This is going to make the next daily cycle window to be at the beginning of 2026 at around January, February, and then the next weekly cycle low to be at around May and June. And something that I always say here in the channel is that you can never say never. Because although we are, as a context, in a bear market, I am still expecting some counter trend bounce to the upside before we move lower. However, I have no idea how high this counter trend is going to be. It can be just as further as the 50 weekly moving average. It can go even higher than the previous all-time high. The best thing we can do right now is just get ready and make our strategy worth it. Because I noticed an extremely similar behavior back in 2021, beginning of 2022 for Bitcoin. We had the price touch the 50 weekly moving average, making the RSI go below 50. And then the DSS started to reverse back up. After that, we had the last leg up for the new all-time high. And then the price dropped 50%, crossing below the 50 weekly moving average. And that's exactly what happened today. We touched the 50 weekly moving average, RSI below 50, DSS crossover to the upside, we reached new all-time high, and now the price broke down the 50 weekly moving average. I do not expect the price to break down as further as 50%, at least at this stage. But as you can see right here, from 2021-2022, we reached quite below the previous swing low. Guess what? That's exactly what happened today again. After the RSI has been as further as 40, just like it is right now, we had a counter trend bounce of 33%, retesting the 50 weekly moving average. If we fast forward for today, that's exactly what I believe is going to happen. A counter trend to the upside, retesting the 50 weekly, at least the 50 weekly moving average at around 26.56%. Now that begs the question, what is the context that we are waiting for to push the price of Bitcoin even higher and higher? And the first piece of data that I want to talk about, guys, is the fact that the US dollar index is showing signs of a reversal to the downside. If we continue this downtrend right here up until the end of 2025, we can definitely expect for risky assets, including Bitcoin, to go bullish. And again, in the shorter time frame. The other catalyst right here is the fact that we are now at the extreme fear level on the Fear and Greed Index, even lower than April, as further down as further COVID-19. Usually this means that we have reached local bottoms and we are about to see a reversal coming up. The other catalyst of how much the price can go further is the M2 global liquidity and the M2 growth and borrowing rate. We know that the M2 is showing signs of weakness and did not reach new all-time high. At the same time, the M2 rate is still trending down, which means actually quite bullish. So for the next couple of weeks, we have to at least keep this level on the M2 rate. And if you want to see a stronger leg up, we have to see the M2 rate going back up. Another piece of data that I'm closely looking at is the ETF inflow. Although we had a lot of outflows recently, we need to start to see the ETFs to get more inflow back into the markets. We can also say with a good amount of confidence that whatever liquidity we had from the downside has been taken. We barely have any liquidity right here for the bulls, but if you take a look at the upside, we had a huge amount of liquidity to be taken. And I think institutions are getting ready to grab this liquidity right now. Especially when we're talking about big institutions and market makers, nothing is random. This type of situation here has some bullish implications for crypto in general. We're talking about Wall Street validation. A major US bank like JP Morgan offering BTC-backed products signals institutional demand entering to another stage. This is the first implication. Implication number 2. Bitcoin becomes collateral in traditional markets, potentially reducing sell pressure as coins get locked. This is going to be a new liquidity channel, so this is why we're going to keep a closer look at the ETF inflow. And this is also coincides with the late cycle narrative. This is going to be point number 3. Usually when big institutions launches product, it coincides with the euphoric final leg of bull markets. And the markets already started to price in the next Fed chair. This next leadership is going to be pro-innovation. A Fed chair familiar with the crypto sector reduces regulatory overhang. Asset is also historically more dovish. This means that traders will price in easier monetary policy, supporting risk assets. All in all, a crypto-friendly Fed chair becomes a catalyst headline for a final surge. Getting a little bit out of the economic spectrum, now we have some positive forecasts between Ukraine and Russia. So I would not be surprised if we see a positive news regarding this war over the upcoming weeks. This is going to be a global risk on rotation. Peace reduces geopolitical stress and shifts capital from defensive assets into stocks and crypto. Of course, this is always going to impact oil, lower energy and inflation pressure. Markets are going to anticipate a cheaper oil. This is going to be dovish for macro conditions. And now this is also my tinfoil hat moment. The US government canceling reports means pretty much data blackout for everyone. If we have no macro data, we are going to rely on sentiment. And in such environment, crypto tends to outperform. Of course, this is also going to bring more volatility. And without proper data, traders are going to speculate poorer conditions, which is going to bring earlier rate cuts. Now, this is going to bring back the narrative Bitcoin versus Wall Street. This kind of story usually pumps social engagement. This is going to bring more inflow. Any perception of institutional resistance often increases trader conviction in the blow-off top phase. And at the same time we have this kind of behavior, we also gonna have JP Morgan also launches a Bitcoin backed bond. This is another liquidity channel. So we can see that from the market perspective overall, big institutions are placing their pieces on the board. Let us not forget about the White House dinner with BlackRock, JP Morgan and all the other big institutions right before the US shut down. What do you think they discussed there? Why do you think that all of a sudden, right after that dinner, the US shutdown ends? And now we have JP Morgan taking action on Bitcoin and crypto market. I don't think this is random at all. Which also leads me back to why I believe the price dropped so much. They made that happen so they can buy Bitcoin at a discount. This is not random. We had sentiment shockwaves. Peace, institutional adoption, anti-bank narratives, Fed speculation and the dovish expectation of the next Fed, and narrative-driven inflow. I do not think that any of it is random, but was actually caused. This is the exact combination usually seen in the final euphoric expansion before the cycle peak. So now is the right time to talk about some trading setups. I already placed my trade here at around the 89,000 level. I noticed we had the breakout of the 10 daily moving average. SI was reversing to the upside and the DSS also crossed over. So my entire system was signal a positive short-term bullish trade. On the 4-hour time frame, we can see the price has break the structure at around the 89,000 level, switching bullish on the short term, forming an imbalance and a point of interest at around the 86,000 level. And when we look at the liquidation heat map, we can see a pretty nice liquidation cluster right here at the 86,000. So I would expect the price to go back down here, ranging around the point of interest, and who knows, with a liquidity sweep right here on the 86,000 before continuing its way up. Ethereum is looking quite interesting. It bounced back from the 2,600 swing low, showing further strength to the upside. On the 4-hour, we can see that it broke the structure at around the 3,000 level, forming an imbalance in this region right here, and another block right here at the 2,900 level. So this is exactly where I'm gonna place my trade right here. XRP overall is still trending down, which is not look good at all. But I noticed a break of structure at the 2.15, forming another block at around 2.05, and my next target would be at the 2.4. I'm not very confident with Solana. Actually, I do think that it is going to retest this region right here before continuing its way down. Like I mentioned on my previous videos, I also noticed that ZCash was about to start its bear phase. I already placed my short trade at the 582, and I do expect the price to get as further as the 46.95. I also have the confluence of the RSI trending down and the DSS crossing over to the downside. But I want to hear you guys in the comments. Do you have any more pessimistic scenario? Like going as further as the 90,000 and who knows, starting to trend down in the bear market? Thanks for watching, see you on the next video.